And local trade, well, it is set for yet again poised for mixed sentiment as the start of the week. The JSE weakening along with global peers on Friday as investors assessed the U.S. Federal Reserve's preferred measure of inflation. Let's speak now to Simon Brown, JustOneLap founder. He joins us now for a quick update. Simon, it's a good Monday. It may be gloomy outside, but tell you what, it is a damn good Monday. How are things shaping up at the JSE?
Morning, Polly. It is an excellent Monday, as you say, and you started green, and we're not going to argue with that. The overall market's up 0.2%, being led higher by industrials, almost 1% higher, resources and financials, both 0.5% in the green, with very little red on the screen. And the red is, frankly, a slightly stronger rand. Against the dollar, we're at 18.83. Against sterling, 22.81, and against euro 19.88. So the rand looking good. And gold trading $2,506 an ounce. Brent 89.42. Platinum $912 an ounce, and palladium $1,132 an ounce.
Let's talk about the South African Reserve Bank's data on private sector credit extension for the month of September. That data is out. Make sense of the numbers for us, please.
Yeah, so it came in year on year. The data came in at about at 4.6%. It had been trending down. It was almost 10% if we look towards the October of last year, and that was almost the highest level in a decade. This number tends to average around the 6 or so. So certainly more credit being picked up there by the consumers in South Africa, but at around that 4.6, it's not something that necessarily should be causing stress. If nothing else, it's sort of in line with inflation, which makes it actually make a fair bit of sense in that regard. So a middle of the line market didn't see it as anything worth worrying about in particular.
Let's then look at what we are looking ahead to. I'm sorry, I'm using two words there in one sentence that look. The Minister of Finance, Enoch Godongwana, and the medium-term budget policy statement, that's scheduled for Wednesday this week. What should we look out for? Let me start there with that question.
Going to be tough, as you say. Wednesday, 2 o'clock in Parliament. We're seeing a revenue shortfall in South Africa, and the reason for that is broadly twofold. In the one sense, we've got commodity prices coming under pressure, and this has meant that boom that we were getting from the profits from those commodity mining companies has not followed through into this year. And then, of course, just corporates are finding it harder out there. If nothing else, the load shedding costs, which means they're making less profit. So he gets less revenue on the one side, and if this was your budget, my budget, one of the viewers' budget, when revenue's down, well, you try and boost the revenue or you cut the spending. How do you boost revenue? Tax increases. I can't see that happening, not ahead of an election, which means really it's going to be about where can we cut spending. At the moment, about 18 cents of every rand goes to pay interest payments. It doesn't leave a lot there. There's no space in the social grant budget, so where's it going to come from? But it's going to be a tough one. It's going to be really hard.
Can I just stay on this point for 1 second longer, Simon, and ask you about the mixed messaging and whether the market has reacted to this? Because we've got two of the country's most important officials, the president, who says we shouldn't worry, we're not running out of money. Then you have the finance minister who sort of is taking a different tone altogether. Markets, have they reacted to this at all?
Markets are believing the finance minister, and truthfully, we've seen this coming. I mean, we get regular updates. We can see from the exports that are going through. We know that tax revenues are coming in lighter this year, as projected in the budget of February. So there's no surprise in that regard. So, when the president says it's fine, we're not running out of money, in a sense, he's right. We're not running out of money, but we've got to make some hard choices. And I think, the market, unless there's a change to tax rates, as I said, I don't expect that. And it depends where the minister cuts. But certainly this is something we've seen coming for a number of months. And truthfully, the minister's also been talking about it. He's been out there the last month or two saying there are some hard choices that government needs to make.
Yeah. Let's conclude the conversation with company news. Vodafone poised to offload its Spanish operations. Talk us through those developments.
Yeah, so this is quite interesting. So the Spanish market was very fragmented. With, if I recall, I think there were 6 or 7 operators in that particular market. There was a fair bit of consolidation sort of during the pandemic, 2020, even into 2021. But Vodafone wasn't involved in any of that consolidation, which leaves them as a very, very small player in the Spanish market. In terms of the Vodafone group, Spain is not significant. South Africa is bigger than they are in that regard. And they've now taken that decision last year, ultimately, to sell it, and it seems like they finally got some finality on it. They'll get a couple of billion euros for it, sterling, my correction. But as I say, it was fairly small, and it really is them consolidating and say, let's focus on markets where we're either number 1 or 2, as, for example, South Africa, rather than markets where we are a lagger and right behind the pack.
Simon Brown is JustOneLap founder. Thank you very much for that markets update.